Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway. Today's date is Wednesday, May 17th, 2017. Well, folks, take a look. This is the S&P 500 tracking ETF, the SPY. What a drastic decline. Get this, folks. You want to know a little cool stat? In the last 15 days prior to today, the market was in its tightest range ever. That's right, folks, the tightest range for a 15 trading day span ever until today. And oh goodness, did it break out in a major way in terms of volatility. The market's getting crushed here, down 3.5 on the SPY. That equates to about 35 on the S&P. NASDAQ is getting absolutely manhandled here. I mean, this is just an ugly, ugly sell-off. NASDAQ's down 135 points. Here's the QQQ, which tracks it as the NASDAQ 100, down 3 points or over 2%. Now, the one thing that gets my attention immediately is noticing on the Qs chart, we're into the daily 20-moving average. So that's going to be a big test for this market and potential support. On the spiders, if we go back to the S&P, notice how it's trying to hold on to the 50-moving average. Now, ultimately, even if we get a bounce day or so, I still personally believe there's more downside because there's too many levels that need to be taken care of. For example, there's a gap fill right here at around 235, which is not that much lower. It's only a $1.50 lower than current levels. But in my opinion, that's where we're going. Then we'll see if the market can really firm up and start to move back to the upside. Very interesting market, guys. I can't stress that enough. I mean, this is just wild price action, absolutely off the charts. Again, it all stemming, and I'm sure you've heard this from the news, so I'll just briefly go over it. But it all stems from basically a Comey memo that Trump had asked him to drop an investigation on Flynn. And the problem with that, I mean, listen, whatever the legalities are, it is what it is. But it's the point that it's delaying tax cuts. It's delaying corporate tax cuts. It's delaying, infrastructure spending type programs. And this is something, and this is the thing, we've heard lots of scandals over the last 2, 3 months, 5, whatever. Basically since Trump became president, there's been a scandal a week. But the point is, all those were just minor in terms of the delay factor. This one has legal implications. I mean, there's actually a potential obstruction of justice charge here. People are now talking about impeachment. Now, I doubt there's no way the Republicans, unless something more comes out, are going to vote to impeach Trump. But in all fairness, that might be the best case scenario. I know that sounds ridiculous, right? Best case scenario for the Republicans is to get rid of Trump. But if you think about it like this, if Pence became president, all of a sudden you have a brand new head president, and he's going to go about doing tax cuts and all this other stuff anyways, and then a lot of the Republicans would be 100% behind him. Listen, again, the odds of the Republicans actually impeaching Trump are probably zero, but if you think about it from the perspective of getting tax cuts done, that's the best case scenario. The market actually, in my opinion, if Trump was out of the way, the markets would end up rallying humongously. I think the markets are skittish here because they know that the Republicans most likely won't impeach, and it could be a drawn-out process which delays these tax cuts, all that stuff for literally at least 2018. And then the problem is you have the midterm elections, and a lot of these Republicans may not want to do something that could hurt them with their constituents, like giving rich people tax cuts. So, anyways, frankly, it's a shit show to use vulgar language, but that's the way it is these days. Bottom line is, the markets are in fear mode here. The VIX itself is soaring today. Great rally on the VIX. In fact, let me just pull up the VIX on one of my other charts here. I have multiple screens, obviously, that I'm utilizing here. Looks like to me the VIX, let's see what we got here. Just bear with me while I'm pulling this up, and then we'll get into some other analysis. The VIX itself up 32% today, folks. 32%. Remember when we were trading on the VIX below 10 and it was historic 24-year lows? I said to our members, I said, you can buy the VIX anywhere around 10 because historically we never stay here long. And here you have a 32% gain on it. Awesome, folks. Absolutely awesome. And profits are flowing today for members. If you're a member, you're making big money. Because, we have options that are paying off. I just took a 45% gain in a week on the Q's puts. All right, my partner Nick, he took gains already on options. In the research center, I was short Tesla. We have a bunch of shorts out there. And again, we actually have the VXX on the long side. We're in the money on this thing as it pops up. The profits are flowing. Listen, the market was dead for the last couple months. And who knows if it's going to go back to being dead, but we are here to kill it. And I'm telling you, you give us volatility, we're going to make a lot of money. That's just the nature of the beast. All right, couple things that I'm watching here. Number one, Apple. Apple major level. Look at the low today, 149.90. I think there's a little bit more downside to the 20, but I honestly think that Apple's drop today, I mean, that's a huge drop, 3%. Probably will get a bounce off the 20 moving average. I really do think that because there's so much euphoria. I think people are going to, as soon as things calm down a little bit, so maybe one more down day, I think bottom fishers come in at least for a few, a week or so, and they'll buy a lot of these beaten down plays. Take a look at Facebook today. Facebook's gonna, where Facebook's going? Right here. All right, 50 MA right there. That's your target on Facebook short term. Current level on that is right around 143.5, give or take a little bit. So it's got another couple dollars to the downside, $2.50 to the downside on that. If we take a look at Alphabet, Googl, formerly Google. Google just having a small down day, only 1.75%. I guess that's pretty big, but nonetheless, I would expect the 20 MA on that as well. So it's going to be interesting. I mean, bottom line is, folks, the markets are intrigued by this development and frankly scared because, again, a lot of the reason the market rallied was due to those tax cuts and corporate, repatriation of trillions of dollars, all this stuff, and it could be on hold, and I'm sure it will be for a little while. So there's a lot of a decent pullback that should take place until things calm down. The financials are really seeing the biggest drop today. J.P. Morgan, take a look at that, down 3.75%. Goldman Sachs, look at that, down over 5%. Goldman, huge level, though, at the 200, guys. Huge, huge, huge level. You have a gap fill. Oh, my God, this level on Goldman is so sweet. 200 MA, you got to think about that's a great level there. It's right around 210. That is an awesome level. Take a look at the drop on Bank of America, almost 6% on BAC. And again, BAC will have a lot of support around $22.25 on BAC. Bottom line is you got to come to InTheMoneyStocks.com. All right, join the research center. Take the 7-day free trial. The profits are here. Get in it now because if things are getting wild, the profits are flowing. It's like you have a profit tree. You just pull a $100 bill off as a leaf, like leaves, boom, 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 and they're blooming every quarter, every quarter. Take care, guys. Join us there at InTheMoneyStocks.com.